Good morning, viewer. I typically record at night, but today we're going to do it in the morning. We're just going to go over the current positions we took this week in the swing trades, the three stocks that I had mentioned, where they're currently at, and we went over a high-level overview of why I took these positions, but today we're going to go a little more in depth. I'm going to teach you how to read like the income statement and the balance sheet and what I'm looking at in terms of the financials, so that you can start to learn how to actually gauge whether or not you believe a stock is over or undervalued. My name is Chris Blom with Blomonomics. If you're watching this, you're a Blomonom economist. This channel is made for those who want to start investing. I swing trade my way into long-term investments. So today we're going to be focused on swing trading. If you do learn something today, type thumbs up and let me know what you learned in the comments. All my content's free. It's always going to be free. So like and subscribe, and let's get right to it here. So there's two positions that I mentioned that we took in our public portfolio. Our public portfolio being, we put $10,000 in there last week that we're going to be trading publicly, swing trading, and then taking those profits and putting those into long-term investments and assets. So the two positions we took were Duolingo at $184.74, and we took a Celsius option for the last portion of our money here at $3.60. Three of them call options that expire on March 20th, 2026. If you're not too familiar with options, don't worry, follow along for the Duolingo, because that's really going to be our topic for today. So, the story of Duolingo. Why did we take this position? Duolingo has been growing. If you remember last episode, if you watched the trading setup, I have this multiple moving day average as one of my indicators on my free trading view here, so you can set this all up for free. I'll really quickly go through the settings with you. It is just a 10-day, a 20-day, a 50-day, and a 200-day moving average, the purple being the 200-day. The lesson from last video was, when we look at the S&P 500 and we look at the NASDAQ, it typically is bouncing on top of the 200-day moving average. Why is the 200-day moving average important? Well, if the stock is sitting above it, it's considered bullish. If the stock is sitting below it, it's considered bearish. Investors, big hedge funds, algorithms, they're all using like the 200-day moving average to guide trading decisions. So a lot of people will have automatic buy triggers or automatic sell triggers when it hits this number, or not number, this line, this indicator. And really what you have to do is that and we talked about this yesterday, there's two pieces of trading that kind of affect the price of stocks. One of them is charting, because all the big corporations are looking at the charts. The other is just sort of macroeconomics, the news, global economics, what's going on. And so you have to kind of balance the two of those. If a stock, so let's take a look at Duolingo. The IPO back in 2021 drops below the 200-day moving average. It doesn't even create the average until 200 days into trading. We sat above it, above it. We tested it. This is a daily chart. We've tested it a couple times, but it snapped back above it with this huge bull run, bounced against the 200-day moving average, huge bull run, and then we finally broke through it right here. We tried to retest it. We retested it again right here. We've retested it again right here, and now we've been in a bear trend with Duolingo for some time. Now the 200-day moving average acts like a bit of a magnet. We are quite far off the 200-day moving average right now. So that's one of the reasons why we took this trade, in terms of what the chart's telling us. Another reason is we had this big consolidation back here for about a year. They had lows of about 170 and they had highs of $250. And we're sitting right back in that range now. So my hypothesis is that we could see lows of about 170 again and highs of about 250, just based on investor psychology. But there's this magnetic force that is going to try to pull us back up to the 200-day moving average. So our trade is exit at $250, stop loss at 170. Now, beyond the chart, why might Duolingo be a good trade? So again, we've mentioned this a couple times. I use Google Finance. It's free. You can set up a bunch of watch lists. We have one for open trades right here. We have our Duolingo and Celsius, both those open trades, doing well, or at least in the green today. When we click on the stock itself, you can scroll down and you can start to look at the income statements. So income statements are in here, balance sheet is in here, cash flow is in here. There's a lot of numbers, a lot of math going on. I'm going to try to simplify this for you, and so you can get an idea of when you look at this, what you might be looking at. So the first thing to note is year over year revenue growth. The company made a lot more money this year in September than at last year's point in September, 41% up. People are paying more for subscriptions with Duolingo. People are paying more for features. Their operating expense. So this is what they spent to grow the business. And so essentially the difference in this, the difference in the 271 and the 157 is their profit, or close to it. And their net profit is going to be 107%. This is a percentage. You're like, how can it be 107% net profit? That's because of a one-time, it would have been like a one-time tax benefit they would have gotten. That's the only thing that can like boost, or one of the only things that can boost your profit that high. Okay. Earnings per share are strong. They're making about $6.80 of profit per share. So really what you're looking at here is, are they growing? Top number, I can't highlight this, it's too early. Are they growing? Are they overspending? What is the difference between the revenue they're bringing in and their spending? These numbers are all going up. This is like a pretty healthy income statement. These numbers are inflated likely by a one-time tax benefit, the profit and their net income, but regardless of those two numbers there are still healthy. Balance sheet. This is their cash. They have $1 billion of cash. Huge cushion if things go wrong, and they're very liquid. That's up year over year. They have more cash than they had last year. Total assets. They have almost 1.9 billion in assets versus having 578 in liabilities. They own way more than they owe. So just a strong financial base, meaning low bankruptcy risk. So long story short, how much cash do they have sitting on the sideline? How many assets versus what they owe? Lastly, cash flow. So cash from operations, 84 million. That is great. So this shows that they're actually generating like strong cash. They're reinvesting in the business. So that's what the cash from investing is. They're reinvesting in the business. It's normal for growth companies. There's no real red flags here from debt. Cash from financing, not a ton. And then, ultimately they're just making real money, free cash flow. That is the real money that they're making and putting in their bank account. Long story short, when I look at these three charts, this is what I see. So Duolingo's revenue jumped over 40% year over year. And the crazy part is that the profits have exploded, very likely due to a one-time tax benefit, but still a really strong sheet. Balance sheet, Duolingo is sitting on a ton of cash and way more assets than debt. Lastly, real strong cash generation. They are making cash, real cash flow. They are a profitable business. For a tech company, this is typically a huge milestone, and they're there. Now, why did Duolingo drop 30% the other day? In one day, came down here 31.7%. If you want to know how to do this, you just click the ruler. From where it was sitting at in the beginning of October, so in about a month, it's dropped 46%. That's insane. That is a huge drop. Why did it drop? Okay. This price to book ratio is something that you need to learn, a price to book ratio. What this means is it's like the book value per share of what an investor is paying for the stock. At 1.0, that means an investor is paying exactly what the company is worth on paper. That is a really good deal. If you think that the company is not going to go any higher in valuation or lower in valuation, it's just going to be steady and static, a 1.0 PB ratio is what that company is worth. If you think the company is worth more right now than its assets, so we look at all of this and we say, okay, they have all this cash in the bank, they have all these assets, they're likely going to keep investing in growth. the number will move up beyond 1. So a 6.58 is a pretty high price to book ratio. That means that investors at these price points are expecting quite a bit of growth. When we compare that to Amazon price to book ratio, they're at a 7.06, meaning that we think, at this point, Duolingo is going to grow at the same pace, a little less than Amazon, which is a tried and true, proven company. They have, they're in markets all over the world. So it's just, you start to think about Amazon versus Duolingo. Are they one and the same? Maybe Duolingo's smaller and they have more agility and they'll actually outgrow Amazon, and then you're getting it at a bit of a discount. You compare this to Palantir, which there's a lot of speculation that it's overvalued or not. They're at a 66 price to book ratio. So very high valuation. Investors think that this company is just going to continue growing, and they're going to grow into this valuation. So that is the one thing that you have to look at on the stock, is that there's already a lot of growth priced in. If that growth doesn't happen, investors are going to get spooked, which is exactly what happened. Investors got spooked. Why did investors get spooked? The long story short is when they announced their earnings, which were really strong, so strong earnings, yet you saw a 30% plummet, they essentially said, management said that they are prioritizing growth and teaching quality via AI rather than maximizing immediate short-term profits. So that is what spooked the market. The company said, rather than just going in like hunting profits in the next quarter or two, we're actually going to be looking at the teaching quality, leaning into AI, prioritizing user growth. And to me, those actually sound like pretty good things. To the market got spooked. They said, I don't know if this company's worth this valuation. So we're out. 30% of investors were out. So that is how you read an income statement. So when we look at the stock again, charting is in our favor. It sat in this consolidation for about a year. We're back in there now. We're below the 200-day moving average. We've been below the 200-day moving average for some time, but the 200-day moving average psychologically to traders acts like a magnet. So this could get pulled back up. The price is, we're already priced in that bad news of the market, getting spooked over them prioritizing growth and teaching quality. So that's already priced in. So now at this point, as long as things tend to go well and Duolingo keeps executing, I have no reason to believe why the stock would not go back up. Of course, the caveat is if there's some black swan major market event where the market plummets or something like that. But that is the position on Duolingo. Where are we at today? We're pretty static. I pulled these positions. I entered them the other day. I think it was like November 7th. We're sitting in both of these. We're about $101 up on them right now. So nothing has really moved in my two positions in both Celsius and Duolingo. But I just wanted to give you kind of a market update where these positions are, kind of start to lean into going into the technical indicators a little more, us as a group leaning into the balance sheets and the income statements a little more, starting to familiarize ourselves. The whole point of this channel is so that you learn and that you don't have to just take my stock picks, but you can start to develop those of your own eventually. The honorable mention is a couple days ago, I mentioned that I was trading Netflix in my private portfolio. I'll give you a quick update on that trade. So the honorable mention was I purchased Netflix at $45.74. I have to edit this. I sold it at $50.20. So I bought 1,500 shares. It cost me $68,000. I sold it at $50.20. Now this is NFXL. It's a 2x leverage Netflix ticker. So this isn't NFLX, which is the standard Netflix ticker. So I got 2 times leverage on this. I was just in a really good position to buy. So I grabbed at 1,500 shares. I sold 1,000 of them. And this was on November 12th. I probably should have edited this. So I held it for 6 days. I sold it. I made $4,400 profit. I'm still holding 500 shares now with a very shallow stop loss. So I'm about 2,000 in profit still on these 500 shares, which I could exit right now and take about $6,500 profit on the trade. If it drops below that 2,000, my position auto sells, and I will take $6,500 on that trade. However, I'm just going to let that ride up. If Netflix keeps growing here, I'm just going to now kind of ride this into oblivion and keep raising my stop losses just below the price, maybe about 5% below the price, so that I just keep kind of growing my position with the stock, and eventually I will get stopped out and my position will exit. So we can go over how I set those stop losses. It's going to be a little different on every brokerage account. We can chat about that in one of our future videos, but I just wanted to give you a quick market update on the positions we took, where they're at, why we took them. Nothing's really moved, so you can still get into these positions at a very similar price I got into these positions if you share that same conviction as me. Again, I'm not a financial advisor. This is not financial advice. This is for entertainment purposes only. So make sure that your position sizing and everything is according to the money you have. I would not put a massive chunk of my actual trading portfolio in here. But for the public account, what we're doing is we're going through the exercises, we're going through the motions that you can all kind of see the way I think when I approach trading. Again, shoot a thumbs up if you learned anything today. Just thumbs up, and maybe even tell me what you learned in the comments. Super helpful for me for creating content for you, as well as will help kind of spread the word in the algorithm. So appreciate all the support, and we'll meet tomorrow. Cheers.